You guys actually reminded me. Thank you. How do you turn your mic off? There's a mute button. Yo, thanks for reminding me to record. Okay, it's recording. Okay, yeah, the use there. Right. So okay, let me switch off the chat because it's gonna disturb me. So guys, the first thing we're gonna touch on is psychology, right? Psychology, and touch on psychology, because everybody can trade, right? Everybody knows how to analyze the market, but only a few people can actually like trade and hold positions. I know a lot of people who open trades. It's a good trade, but then they close too soon. Or worst case scenario, I know people who don't even open trades at all because they're scared. Like you must come to the market with the right mindset. You mustn't come to the market scared. You mustn't come to the market with a big head. And one thing you need to know is that if you're a beginner, you are bound to make losses. You are bound to blow accounts. There's no way around it. So like you can't really cry when you blow an account. Like you need to accept that this is like a business. Businessmen, they go to the bank, right, and they will take like 100 million rand loan or up to 500 million, to start up a business, to buy land, buy a property. I'm sure maybe you guys have parents or family members that are entrepreneurs. You go to the bank, take a loan, right? You're basically risking, like, an entrepreneur is someone who risks. So they take that 100 million and then they go buy land for 50 million, and then they left with 50 million to buy, let's say it's a law firm, no, not a law firm, yeah, a law firm, whatever it is. You buy equipment, you buy desks, you buy laptops, you employ people, right? And then 3 months down the line, not every business is going to be successful. 3 months down the line, you're not making a profit as a business. You're forced to close down. That's 100 million gone in debt. So you must treat trading like a business, guys. You can't be crying if you lose 2,000, if you blow 2,000 rand. Like it's you bound to like lose money. And in terms of psychology, that's the first thing you need to accept, is that you are bound to make losses. Once you deposit the money into your broker, guys, it's no longer yours. That money is no longer yours. You need to now work on a way to get that money back. You feel me? You need to work on getting that money back. So you need to please, Leander, I don't know. I can't see the participants now because I'm on the screen. Leander, switch off your mic if you can hear this, just please. But I hope you guys can hear me though, what I've been saying. Could you guys hear that?
Bandile, I'm really sorry, but can Luyanda just switch off his mic? He's really disturbing us. Like a skis in Luana, but can you please just switch off his mic?
Hey, let me look for him. Let me look. Oh, I see. Leander who?
Leander. I'm not sure about his name, but it's Luyanda. He has his video camera on. It's disturbing. Can you just switch off his mic?
I think I just removed. It's recorded, so you'll see it. Okay, so as I was saying, yes, but we can't see you. I think it's out. Okay. So yeah, guys, the first step in terms of psychology, right? Working on your psychology, you need to accept that you are bound to make losses, and you need to come to the market with a calm head, cool-headed, like you mustn't come to the market with the mindset to make money, you must come to the market with the mindset, you mustn't come to the market scared. So you mustn't come cocky, you mustn't come scared. You must just be in the room, must be neutral, right? You need to be neutral, right? So that's like just a little bit on psychology, guys. Like psychology is hectic. There's a lot more to it, But for today, like you need to accept going into this week, you need to like accept. I'm not demotivating anyone or anything, but you are like bound to make losses. You know, even I make losses. Remember, as a trader, like you are bound to make losses. It's like a business. It's like a business thing, right? So enough on psychology, guys. I'm just gonna get into technical analysis, right? So remember, guys, we use technical analysis. I don't look at fundamentals. Maybe some of you do, but I don't look at fundamentals, right? Strictly technical, strictly trend lines, right? So guys, remember that in the market, right, the market moves in two directions, right? Uptrend, downtrend, as an example of an uptrend. But drawing is the worst, so you guys would have to forgive me. Uptrend, right? And this is an example of a downtrend, right? Like that. So you can see in an uptrend, the best way to notice an uptrend, right? You need to look at the lows, right? Look at the lows. If like the lows are like going up, then it's obviously an uptrend, right? And look at the highs in the downtrend. If like they're going down, then it's a downtrend. Like the market moves in on an uptrend, it's a high low. Okay, so rising is gonna take time, but this is the bottom is a high low, and this is a higher high, higher high, right? This is like purely the basics, right? Higher high, right? And then in a downtrend, this is a lower high, right? The point where you connect your trend line, this is the high, right? Just that now it's in a downtrend, so we're gonna call it our lower high, and this is our lower low because it's at the bottom. You check, right? So guys, in terms of connecting your trend line, you always want to connect your trend line on your lows, right? So in an uptrend, you usually want to connect it. I'm gonna try to change the color so that it's different. You connect on the obvious lows, guys. So you see, have peak one, low two. Okay, in the textbook that I sent, it's called peaks, right? Peaks and throughs, whatever it is. So you have peak one, peak two, right? And guys, as you all know, let's just pretend this was straight. Let's just pretend. My drawing isn't the best, right? So as you guys all know, we get touch one, touch two, and also touch two. We wait for number three, guys. Touch three is our entry point, right? So peak three, third touch, we call it the third touch. That's where we enter the market, guys. That's where they enter the market. So if we get a third touch, obviously with there's more to it than just touching. It's reversal candlestick, wick rejections, stuff like that. But to simplify it, the third touch, guys, is our entry point. Third touch, entry point, right? Chat, this is where we enter. And again on the fourth, 2 days to change the color, and again on the fourth touch, guys.
Wait, Bandile.
We don't need to we don't.
Sorry
Sure.
to disturb. We can't see the whiteboard. Sorry to disturb.
Can you see the whiteboard now? I can see, but we can see. People are saying they can. Go click on the thing there and choose a different screen. Everyone says they can see.
Okay.
Yeah, just fiddle there on the screens. Swipe to the left. It's saying swipe to the left. Swipe to the left. Okay, so as I was saying, guys, basically we draw a trend line from the two touches, right? And then we wait for touch three. That's if we catch our trend in the early, like while it's still like forming, Sometimes you open a trade, you open a chart and you can see that we got the third touch. Let me just tool. You open your charts and you could find the market over here, right? So obviously what you're going to do is you're going to connect your trend line and you're going to wait for touch number 4, You're going to wait to see how the market reacts to the trend line, basically. You're going to be looking for a fourth touch. Remember, we trade what we see, not what we think, You don't want to, like, some people, I actually get a lot of beginners that ask me that, okay, if the market has moved off the trend line for the third touch, why don't we enter sells at top for it to ride it going down? Guys, that's not like a solid entry point. We strictly trade trend line trading, No trend line touch, no entry. I stick by that rule, no touch, no entry. That's why I can go like 2 days, 3 days 4 days without trading. if I didn't get it touched, I have no reason for me to enter. You know, it all goes. That's just part of my trading. That's my trading rule. Number one trading rule: no touch, no entry, guys. Remember, as a trader, you need to have rules, guys. And I want to share this one rule that all of you guys should actually all of you guys should actually also, like, stick to this rule, live by the rules, like no touch, no entry, no need to force trades. Some people wait days, some people wait weeks without, like, without an entry point. So as I was saying, guys, you always wait for the market to retrace down to your trend line, right? So now let me go to the charts. Let's go look at the charts. Can you guys see the charts? Can you guys see the charts? Okay, perfect. Okay, perfect. So as I was saying, guys, let's do NAS, because last session I was focusing on currencies. Let's do NAS this session. Okay, actually, let me move this thing. Wait, hold up. Okay, yeah. So guys, this message is in the chat. Okay, sure. So as I said, guys, I should remove full screen. Like I said, another thing, we always analyze on the bigger time frames. We do this to avoid being caught on the wrong side of the market, right? So you want to see the bigger picture, guys, bigger picture. That's how you avoid getting caught on the wrong side of the market. Like just a silly example, right? Actually, now I'm not going to go there because there's no waste time. But if you look at the daily time frame, you know that NASDAQ is like bullish, right? Bullish. So we are going to be looking for buys, like are going to be looking for more buys and sells, right? I'm not saying that NAS never sells. There are sell trades that are seen in the group, but looking at the bigger time frame, what type of trades you really want to be looking to enter, right? So as I said, remember, guys, we connect our trend line on our obvious low. So here's our first, second, and third, right? And as you can see, after the third touch, NASDAQ, you see closed above our trend line, pushed up, right? Same as for the fourth, right? So now you can imagine when you caught this fourth touch, and you had the patience to hold, you'll be in deep profits, right? So yeah, that's what you do for your upward trend line, right? And for your parallel, I'll call it parallel because on the other side, right? You do the same. You want to connect it on your obvious peaks, So just like this, touch number one, touch number two, right? But you want to extend it to wait for the third touch to sell, right? So as you can see, we can see the NAS is in a channel, right? This is actually a long-term analysis. So next thing you want to do is you want to go down to a smaller time frame, H4, right? Let me just do it like this. Now focus on what's happening, right? So as you can see, this is our third touch. That shot up. I covered this in the last seminar, right? In the last Zoom thing. Your take profit is always your previous high, right? Because that's the zone where the market is most likely to reverse. So as you can see, because some people struggle, some people ask me, like, how do I know to set my take profit? Guys, take profit is always the previous high, always, at all times. So this is the third touch. Remember the third touch I showed you on the daily time frame. So that your entry points would have been somewhere around here, right? And you would set your take profit to be this high over here. This is the previous high. Take profit would have been smashed, take profit would have been smashed. And like I said, the previous high is the zone, is where the market is most likely to reverse. And as you can see, that exactly did happen. Exactly that happened. Came back down for fourth touch. Take profit now would be the previous high, which is over here. You can see CP would have been smashed, But I went into detail with this in the last one. It's saved on the group, right? I even explained how to set TP2, TP3, all that stuff, right? So that's just take profits, right? and targets and all that. So we can see now, let me just delete this. So as much as we started our analysis from the daily time frame, right, you want to go into smaller time frame to catch more trades. Because honestly speaking, if you're just waiting on the daily time frame, you're like gonna miss out on 98% of the trades, because you'll be like, now you're gonna wait for 2, 3, 4, touch number 5, and that isn't always guaranteed, So you need to see, this is the purpose of using this is the purpose of multi-time frame analysis. You capitalize, you can catch more trades, right? So let's just go into here. Like I said, guys, you draw your trend line on the obvious lows, right? So that's where we would connect our trend line. So you can see we have touch number 1, right? After that, we would connect it to here, right? And obviously, we can see that our trend line we've drawn our trend line, and now we want to wait for touch number 3. Remember, 3 touches to make the trend line valid, guys. 3 touches. This is usually that stuff in that book that I sent, like 3 touches make the trend line valid. So touch number 1, 2, 3, right? This would have been your entry point. But remember, guys, like I said in the previous video, in most cases, you want to wait until the daily, you want to wait for the daily candle to close to avoid being caught on the wrong side of the market, right? That's what I personally like to do. Daily, if not H4, right? So in this case, let's talk about where we would enter the market in this example, right over here. So you can see we have touch number 1, touch number 2, touch number 3. So it was like a fake out in a way, right? So let me show you guys the importance of waiting for your candles to close H4 and daily time frame, preferably daily, right? So looking at the chart, you would have seen NAS drop all the way down, and remember we drew in our trend line. So you'll be waiting for a reversal as it touches the trend line, right? So you'll be waiting for NAS to reverse over here. Let me just remove this because it's blocking the candle. You'll be waiting for NAS to reverse right over here. Right over here. You're waiting for NAS to reverse, but you can actually see that this candle is very, very bearish, and it shows no sign of reversal. No sign of reversal. So in this case, guys, like I said, we don't just wait for the market to touch the trend line. We need confirmation, candlesticks closing above, reversal candlesticks, wick rejection. You look at a lot of things, right? So me personally, see touch 2 and 3, we're sitting on the trend line. For me, it's still not an entry point. Let's pretend all of this hasn't happened, right? We're looking at it just as this was the last candle that we can see. Just pretend, guys. So me looking at it, I wouldn't enter, and obviously you can see that the candle opened, and at some point the candle came back down here. Candle reached all the way down here. Remember, guys, it's important to know how to read candles, but there is that candlestick Bible, what that I sent, all those PDFs I sent aren't useless. Those are the PDFs that taught me after my session with my mentor. After the one-on-one session, he gave me videos, PDFs, and I literally had to read over those, practice. Obviously, with live sessions, I got better and everything, right? So you need to understand. You need to know how to read candlesticks, right? So eventually, this candle closed right over here, right? And it's actually below the trend line, right? So people who rush and jump into trades, they would have looked at this as a breakout because it closed below. They would have looked at it as a breakout, right? So this candlestick closing below. So this would be our breakout candle, and they'd wait for a retest, and they'll look at this as the retest win. That's really wrong if you're only looking on H1. Situations like these. Let's say I open the chart and I saw this candle. To confirm that it's really a retest, I want to see how it looks on H4, right? H4, the candle still wouldn't have closed. Remember, the candle hasn't closed yet, right? It will just be very wicky. So I'll be waiting for the H4 candle to close. In this case, to be safe, guys, wait for the H4 candle to close. And as you can see, the H4, wrong one. Our 4-hour candle closed above with the major wick. So me seeing this H4 candle close like this above our trend line, that would be like confirmation for me to enter buys. So let's say we entered somewhere there with like a tight stop loss, just in case it retraces, right? So let's just do that. Now let's just go down to H1. Okay, so actually it would have been, let's see, would have been here. Our entry point would be exactly over here, right? And we know that on H4, it's a wick rejection, you know. Like imagine if you sold, you would have gotten caught on the wrong side of the market. Yes, it would have dropped when this candle opened, but you can see it actually closed above, right? So that's the importance of using multi-time frame analysis, right? So let's just go into, let's look into this one. I want to show this example too, because this actually happened to me not last week. When was this? 6th, yeah. So as you can see now, NAS, we have touch number 2. Hold on. 1, 2, 3, right? And then here's touch number 4, right? So looking at NAS, we have our trend line drawn in. We'll be anticipating a fourth touch, right, to enter buys. So we were anticipating a fourth touch. See that the candle closed above the trend line, right? On H1. But then when you look at it on H4, you can see that it actually closed below. That was just a minor wick rejection. You know, you can see that it wasn't it actually closed below, right? Let me just highlight this so you guys can see. So we would have looked at it. We would have looked at it as, okay, fourth touch, which I don't blame you, right? So if you just to use one time frame and you entered, you would have gotten a bit lucky. You know, we might have made a little bit of money before like being stopped out or actually making a loss, right? Because you can see that, yes, it came back, closed above on H1. But remember, guys, like I said, you need to wait for H4 and daily time frame for extra confirmation. That's if we've been caught on the wrong side of the market, just like this example over here, right? So you do find a lot of people finding good setups on NAS, but like they just enter too soon. They're rushing trades. There's no need to rush. If you had waited for the H4 candle to close, you would have seen that it actually closed below the trend line, you know, and like you would have been stopped out if you entered on H1. If you entered too soon on H1, you would have been stopped out. So looking at it at H4, I'll be like, okay, no, I don't want to enter the buy, you know, because it closed below. But eventually the market bounced off this zone of support here. Bounced off this low to go up, right? So enough about the past. Let's look at what NAS is going to do this week. Do you guys understand what I just do you guys understand what I just covered? That's just another tip that people don't give out. This thing is flat. It's on the die. Okay. Yes. Right. Okay, now let's analyze.
Oh,
Can that person mute their mic, please? I don't want to remove another person. It's okay, sharp. So now let's look. Can that person please mute the mic? Please, yes, sir. Aside question, do you trust about, yeah. Guys, please behave. Yeah, literally, guys, if we all work together, you know, we can get a lot done. Because it's level. Okay, let me